Stocks and gold up for the day on Wednesday. Bonds down. Happy Thanksgiving to you. If not purchased our book, go ahead and reward yourself. It explains the things that we do here at chartingwealth.com. Also, lots of great training at chartingwealth.com and at our YouTube channel under the same name. Let's jump into this market and see what's going on. Now, we are into a big down week so far. Again, shortened trading week with Thanksgiving and the market closing early on Friday, but we still have a down week. Market up a little bit, the S&P 500 on Wednesday, up 0.34%. Price percent oscillator still rocketing down. Derivative oscillator losing some downward momentum. We have a solid red down candle with a bit of a wick, a little bit longer than the candle itself. Again, resembling more like those 4 down weeks, starting with the week ending the 12th of October, ending with a week on the 2nd of November. Then things sort of went up a little bit the following week, sideways really, and then rocketing again down this week. That is what we have been expecting it to do and what it should be doing with that weekly vertical crossover heading down. Remember what we say over and over again, all things being equal, the market tends to move in the direction of the largest chart, which is down. We go to the 2-day chart, our intermediate chart. What do we see going on there? Going into our 4th down candle. That looks rather nice, representing, well, so far, 7 days of down movement. And again, price movement is below that 2-day trend line. As soon as we finish up this week with a down week, we'll go ahead and redraw the weekly trend line because we did have those 8 days rather of up movement. And then things started moving over. Price percent oscillator, of course, heading down. Derivative oscillator losing downward momentum. We go to the 4-hour chart, and again, are we bottoming on that chart? Somewhere around the 265 mark, we will keep an eye on things. Derivative oscillator still gaining downward momentum. Price percent oscillator heading down, but we see where things sort of hit somewhere around that 265 mark. We'll just keep our eye on things, see what's going on. But the price percent oscillator, again, our main indicator. We'll put a good training in on the price percent oscillator at the end of today's program. If you're listening via audio, one of our podcasts, first, thank you so much for making us, I think, number 4 in the world on stock trading podcasts, number 1 stock charting podcasts, but we don't have that training connected to the audio. So just go to chartingwealth.com, look up price percent oscillator, check it out on the YouTube channel. That's where we are there. So again, things rocketing down quite nicely after we had that 4-hour chart end its pullback and crossover in the afternoon on Monday, the 12th of November. Jumping in point somewhere around about and again, Heikin Ashi candlesticks are not the best way to find your jumping in points, but somewhere around the mark of 274. And of course, we have in the last few days hit a low of 263, so well over $10 on your practice trade of down movement. And you might be saying, if you're new to the channel, why would you get into an index when it's going down? Well, of course, we don't get into that index. We get into the ProShares short. Just for an example, it moves in the opposite direction of the S&P 500. That's what's so beautiful about what we try to show you is you can make money, or you do your practice trades. We're not a stock calling service, we're not giving stock advice. I want you to train, but you can be successful when the market's going up or down if you just have a little bit of sophistication there. So let's continue to move through these charts. We're going to head from the S&P 500 to the Qs. By the way, the software that we use to chart the market, freestockcharts.com. If you'll look in the show notes, you will see a link as to how you can get the layout that we use for free. And if you're interested in actually having the paid version, TC2000, we give you a $25 discount on that. Again, follow the links in the show notes. What's going on the Qs? And we're going to go, of course, we always start with the biggest chart, work your way to the smallest chart. Biggest, of course, is the weekly. What do we see going on there? Again, a nice, solid red down, strong down candle. Price movement well below that weekly trend line. Derivative oscillators gaining a little downward momentum. Price percent oscillator heading down quite strongly. and again was up for the day 0.76%, but our big trend is headed down, that big weekly chart. We look at the 2-day chart, and of course it's headed down. Derivative oscillator gaining downward momentum, price percent oscillator heading down. So again, we see 5 down candles so far. It's only the first day of this latest 2-day candle, but things are looking nice with the Nasdaq 100 for a continued down movement. And again, note that we see, things bottoming out right around the 159.50 mark or so far. Let's see how things go on the morning. Not probably going to be a whole lot of action unless something goes wrong in the world. On Friday, we'll keep our eye on things and then get ready for what happens over the course of the following week. But we see that the price percent oscillator is still heading down. Derivative oscillator lost a little bit of downward momentum. Things sliding sideways for the last day and a half or so. So we'll keep our eye on the cues, see what's going on. Of course, it has been beautiful since we had that 4-hour crossover back in the morning on the 12th of November. Of course, the jumping in point again, somewhere around the opening at 170.40. And of course, the low point all the way down to 157.13. Is that not absolutely beautiful? In just a few short days. That's the power and the magic of the weekly vertical crossover. Looking for your pullbacks in your 4-hour chart and appropriate jumping in points. It is beautiful. This is a beautiful time of year, the fall-winter trading zone, not like the crappy summertime trading zone. You guys remember how difficult it is that time of year. This is the time of year, if you're interested in tracking the market and practicing, you really, really, really need to give it your best efforts. Again, it takes practice. That's how you get to Carnegie Hall. That's how you get good at stock trading. You practice, you practice, you practice. Okay, and investing, not just trading. Remember, reading the charts is key to investing and trading, because we also, remember, we use a long-term charts, and we're going to be giving you that latest quarterly reading at the end of the quarter, of course, at the end of this year in the winter quarter. Okay, now let's go from stocks into bonds. We're going to head to 20-year bonds. What do we see going on the weekly chart here? Well, going into what appears to be the second week of up movement, derivative oscillators getting awfully close to crossing over. Price percent oscillator also is heading toward that red signal line. Have bonds bottom out somewhere at the 113 mark? Possibly. We'll keep our eye on things and see how things transition, and we'll let you know when we have a weekly vertical crossover. That, of course, is one of our key indicators for shifts in trends. Remember, we're not forecasters, we're trend followers. We say that over and over again. 2-day chart shows us we're going into the 9th day of strong up movement. That chart rotated over the 2-day chart, which typically precedes the weekly chart. It's the smaller wave, but enough of those small waves will, of course, push the big wave over. That happened on the 2-day candle ending on Monday, the 12th of November. So we'll continue to watch things. And as we go to the 4-hour chart, what do we see there? Well, we see that again, bonds topped out somewhere back on the morning of Tuesday, the 20th. And of course, have been sliding sideways and down. The movement, though, has not, of course, gone below where that afternoon candle started moving up on Tuesday. So price percent oscillator still moving up a little bit. Derivative oscillator still positive, but losing upward momentum. So we'll keep our eye on things and see how bonds shake out. Now, lastly, we go to gold. Gold was up for the day 0.16%. Gold, of course, had a weekly vertical crossover going up back on the week ending the 5th of October. And whenever we say the week ending, remember, candles aren't candles. They're not fully formed, and we don't count on them until they are complete. If it's a 15-minute candle, it's over at the end of that 15 minutes. If it's a weekly candle, it's over at the end of the week. We do watch it since it's such a big candle throughout the course of the week, but we don't call crossovers until that candle forms, because sometimes it fools us and it doesn't happen. So we don't want to be premature. Now, the weekly candle crossed over, going up back on the 5th of October, and actually went up the 3 following weeks. slid sideways for the weekend and somewhat down the week ending the 2nd of November, and then down the 2 following weeks. And so far this week is an up week. Remember, still in a confirmed up move, derivative oscillator losing downward momentum, price percent oscillator still heading up. Go to the 2-day chart. And of course, we're going into the, well, so far the 7th day of up movement, and looks like trying its best. And when the candle's complete, we'll see whether or not there is a 2-day vertical crossover. If that happens, that's good. Why? Because it means that with the weekly going up, we can start looking for a potential for jumping in an up move. Now we go from the 2-day chart to the 4-hour chart, and of course it crossed over going up back on the afternoon of the 15th, Thursday the 15th of November, been going up for quite a while, up in the morning, strong on Wednesday. A little bit of a pullback in the afternoon, still ended the day up 0.16%. Derivative oscillator losing upward momentum, but that price percent oscillator still heading up. So let's keep our eye on things and see what we see. That 2-day chart is going to be key to giving us a potential opportunity to jump back into an up move on gold. Folks, that's where we are. You want to support the channel, please follow the show notes. You can support us with the Patreon page that we have. We've got lots of great things to offer you there. Specialized trainings on our Bitcoin chart, on our quarterly chart, all sorts of interesting things we give to our Patreon supporters. That first level, you get a Q&A once a month where we'll take your suggestions on stocks you're interested in us following for you and sort of charting. We'll do that once a month. And of course, the intermediate level, we'll give you a phone call, a personal phone call. I call you once a month and we go over your training for about 15 minutes or so and try to help direct you in the right direction. And we just appreciate you being with us. Don't forget, daily market worksheets, weekly market worksheets, and trade worksheets are all available for free in the show notes. There are PDFs there that you can load, print out. We recommend you use those every time you jump into the market. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters, and happy Thanksgiving.